Hi everyone. With a strong June quarter, we rounded out a solid FY21 financial year. Please refer to your fund's investment reports for detailed performance information. So we just want to take this opportunity to reflect on Montaka's current positioning, which we'll do in a moment. But I really want to say right up front that we believe the quality and upside potential of Montaka's portfolio has never been higher than it is today. To help you better understand why this is the case, we just want to step through several of our really powerful themes and transformations that will characterise the next decade and to which Montaka's portfolio is meaningfully exposed. So let me start from the perspective of the consumer. And Montaka sees the creator economy as an accelerating dynamic which is still in its infancy, but which will likely become very large over time. So the internet has done a wonderful job of eliminating geographic barriers and connecting creators with fans across many dimensions like entertainment, news, education, professional development, a wide range of hobbies. But what had largely been missing until now were the tools for creators to provide engaging experiences for their fans and then in turn monetize their fans through subscriptions, merchandise tips, pay-per-views and other various forms. So in the not too distant future, we believe the creator economy will be booming. And this will be great for fans, it'll be great for creators, and also the platforms that can successfully connect the two together and provide the tools for engagement, monetization. And of course, Montaka believes that Facebook, Alphabet, specifically Google, and Spotify are three of the high probability platform winners in this regard. The emerging metaverse is another accelerating dynamic that we believe will be very large in time and for which we remain in the very early innings. So in the same way that the iPhone sparked a mobile internet economy far beyond the iPhone itself or even Apple, virtual reality and augmented reality will ultimately do the same over time to form the successor state to the mobile internet. Montaka believes this transformation is inevitable and will drive value in a wide range of industries and businesses which make mission-critical contributions to this evolution. Montaka believes Unity Software, Facebook and Tencent are three high probability winners in the formation and growth of the metaverse. From the perspective of corporates across all industries, the digital transformation of internal business processes is pretty well understood and will continue for many years to come. Montaka's detailed views on this subject can be found in our 2020 white paper titled Winning in the Age of Enterprise Digital Transformation. Now, there are many businesses vying for their piece of this large incremental spend being directed to enterprise applications. But despite the strong industry tailwinds, Montaka does not believe that all will make for attractive investments over the long term. So Montaka discerns between the numerous investment candidates by seeking out those which will, number one, are mission critical to the corporate customer. Number two, have limited, if any, meaningful competition. And then number three, are undervalued today in the context of their strengthening advantages and high probability long-term growth opportunities. So we believe that Microsoft, ServiceNow and Salesforce fit these criteria and remain core Montaka holdings today. Now, underpinning both transformations of corporates and consumers that we just described are the world's cloud computing providers. So Montaka is well represented in this space with meaningful positions in all of the world's leading cloud providers. So that's Amazon, Microsoft and Alphabet, who lead the world ex-China, and Alibaba and Tencent, who are leading the Chinese cloud market. Now, just about every corporate, government and consumer, whether they know it or not, are transforming their applications as well as their associated storage and compute to the clouds provided by one or a number of these five companies. So, for example, did you know that Google Cloud Platform's largest customer is actually Apple, who is using Google to store its iPhone users' pictures and videos and whatnot? So we believe this space offers significant investment opportunity for three key reasons. The first is structural growth in demand for storage and compute. It's enormous, it's multi-decade in nature, particularly as applications become more compute intensive now that machine learning models are being incorporated wherever possible. Number two, The long-term winners in this space are really known today with a relatively high degree of certainty, given the scale advantages and the network effects that continue to compound. And then third, the stock prices of these 5 businesses fail to adequately reflect the extent of the profitable growth that we believe lies out on the horizon. Now, given the enormous digital transformations that are taking place across all sectors, geographies, and agents of the global economy, it is perhaps not surprising that businesses contributing meaningfully to these changes are pretty well represented in Montaka's portfolio today. But it's important to remember that not all portfolio investments relate to these digital themes. For example, Montaka's portfolio comprises a meaningful allocation to the world's 3 leading alternative asset managers. So that's Blackstone, KKR, and the Carlyle Group. These are the world's highest quality, full-service global investment platforms in our view. And these platforms stand to benefit enormously from a world in which long-term interest rates remain depressed and the hunt for yield continues to intensify. Montaka's views of such a low-rate world playing out with a reasonably high degree of certainty is based on our analysis from 2019. So that's our white paper that was called Low Rates Assets Inflate, as well as our 2020 white paper called COVID-19 Accelerating Our Journey to Inequality. Montaka's portfolio experienced only a handful of minor changes during the quarter. These include scaling up of our position in Flutter, as we flagged last month in our investment reports. Montaka's positions in the leading cloud providers continue to build as we gain increasing conviction that the market is simply underestimating the value of the substantial profitable growth which lies ahead, as we've already discussed. Subsequent to the end of the quarter, Montaka exited several more tactical positions that were included to benefit from the cyclical economic recovery over the last 12 months or so. So this included Berkshire Hathaway, CME Group, as well as BHP. Vivendi was also exited on its recent strength surrounding its impending listing of Universal Music Group. And so what we've done is we've taken the opportunity to realise profits in these names and reinvest them into Montaka's longer-term structural winners that we believe have substantially more upside potential. Geographically, we remain reasonably balanced across developed global markets dominated by the US, EU, UK and Australia. Montaka participates in emerging market exposure selectively, though to a far lesser extent given the added risks of investing in these regions. So our emerging market exposure is primarily driven by Montaka's investments in China's Tencent, Alibaba, as well as India's Reliance Industries, which of course owns Jio Platforms. Just a couple of extra things to wrap up. The first is that we include a detailed case study on Amazon in our quarterly letter written by Daniel Wu. Now there's quite a bit there, so if you prefer a more concise version, please take a look at the most recent Montaka Monocle, which you should find in your inbox. And of course, reach out to us if you don't see it, or you can go online to our website and subscribe directly to our Montaka Monocle there. And then finally, one of Montaka's important business developments in FY21 was the formalisation of our responsible investing policy. Now, Montaka has always believed in supporting positive change across the key dimensions of environmental, social and governance, or ESG. Given Montaka's investment philosophy of seeking to own the world's highest quality businesses, there's always been a pretty large inherent overlap between Montaka's portfolio holdings and those businesses which make positive ESG contributions to the world. But notwithstanding, our responsible investment policy has now been further clarified and is being integrated into Montaka's investment and risk management processes. And if you're interested, you can find a copy of our policy at montaka.com. Finally, we just want to take this opportunity to thank you again for your ongoing trust and partnership in Montaka's investment journey. It is a real privilege that we treasure, and we remain committed, as always, to executing our processes with discipline to generate the best possible long-term experience for all of Montaka's investors. As always, we love to hear from you, so if you've got any feedback or questions, please reach out. Otherwise, we hope you all stay safe out there.